One of the most important things any investor needs to understand is the most basic thing, and that is support and resistance. And the reason being is because this allows investors to know when it is a good or bad time to be buying or selling any particular asset. And in this video, I want to show you exactly how to find these levels so you can make better decisions when it comes to trading. Without further ado, let's jump right in. Welcome. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything that they pour into me. I've been in the investing space for many years now, and I initially got started in the foreign exchange markets, and one of the very first things that I learned was technical analysis. Now, if you don't know what technical analysis is, it's basically using price patterns to help you predict where this asset may start trading, whether it's the upside or downside. Now, as you evolve as a trader and you're an investor, you typically will couple technical analysis with fundamental analysis, which studies the news that comes out around a particular asset. So in this instance, it would be around central banking and economic policies that will influence the foreign exchange markets. Now, if it's Bitcoin, economic standings will also impact it. But in short, fundamentals is basically the news-related things around that particular asset that may affect it. And today's video is mainly going to be about technical analysis and one of the most simple yet powerful tools anyone can use for pretty much almost any asset. Now, to put support and resistance in a very simple box, it is where you're looking to buy and or sell. And if it's hard for you to remember that, just think of support. Support would be the buying and resistance would be the selling. People also use these levels as areas to put their take profits and stop losses to keep it safe from volatile price action. Now let's draw some examples so you can get a better understanding of how support and resistance works. Support is used to help people find good areas of buying or to bring them some mental clarity if the asset will hold its price there because they don't want it to drop any lower. Support is typically found below price action. I like to think of it as a trampoline for price. Now this line that I drew is a support line. So typically price action would come down to this level and bounce along it as a lot of buyers and other retail traders are looking to put buy orders in this area. One thing I like to mention about support and or resistance is it's typically never just a line. So while you may have identified different levels of support, none of them are actual exact levels. I like to look at them as zones. And what I mean by a zone is while you see this line, you have to take into consideration a buffer zone below and above it. Reason being is because the price is never going to trade exactly to the line that you see. You have to understand when it comes to technical analysis, technicals typically tend to happen because everybody is looking at the same support level, but no one sees the exact same number that it's at. This is why I call it a zone. And there's a lot of other fancy terminologies that people use. Typically people use the word demand zone for a support level. They're just trying to be fancy and confuse you. It's support. And the other fancy word people use for resistance is a supply zone. Resistance is supply, support is demand. And I'll get into that in a second, but for now, let's just stick to support. The easiest way to identify support and resistance is when you see price trading and it has a reaction. Typically, the reaction will leave a mark. Now, I'm just going to draw randomly here and all around. Now, what I like to do is look for, like I said, those hard bounces. Those hard bounces indicate that there is some type of interest at that level. As you can see right here, that's a support level. If I drag it out a bit further, it became resistance. So something I'd like to mention here is once support is broken, it often becomes resistance. And that is the same thing for resistance. Now let me show you some resistance levels that I'm seeing on this graph that I drew. You see this area, this area, this area, this area. If I was to draw a resistance line, which is a zone, remember, so you got to think of it as a buffer. And excuse my level of drawing on this, it's quite difficult, but it's the same thing as support. It is just an area that others are looking at to find a position. Resistance is typically a zone where people will find a sell position. So as price trades up into this area, people are looking to find sells. And the same thing with support. In this area, people are looking to find buy positions in the zone. Now, let me go ahead and erase all this. Other ways that people like to look at support and resistance, and this is something that I've always done, is let me go ahead and draw some random jagged lines. Now, as you can see, up top is a clear resistance level. Down below is a clear support level. In between, you have some resistance and support. As you can see, support, resistance, resistance, resistance. Now, people use these support and resistance levels as potential areas to hide their stop losses and or place their take profits. Now, with that being said, let me draw an example. Let's say this is a support level here and this is resistance here, and we have price trading. And let's say I went long in this area. I know that price can make it to this potential area where resistance is, and I would put my take profit close to the resistance. So this way I know the likelihood of this position hitting its take profit is in my favor. Now, the way that somebody would use this exact method, but for their stop loss, is by placing a stop loss below support. So if this is support and we have a long position here, it would be very easy for price to trade down in this area and stop us out if we have our stop loss a little bit too high. So using these support levels and resistance levels, we can place our stop losses in safe zones. So a stop loss, you typically want to put a buffer between the support level and where the stop loss is. This dotted line would be your stop loss. As you can see, from here to here is a good safe margin to where you won't get stopped out. Now, markets are extremely volatile, and sometimes, actually more often than not, you might be right. But the problem is you don't have enough wiggle room for your stop loss, and you end up getting stopped out, and then the trade continues to go in your direction and hit your take profit. And that's one of the worst feelings ever. Now, let me show you some live examples of support and resistance on charts. Okay, here we have USD JPY, and it's funny because I drew these arrows a couple weeks ago when price was down here to show that we're going to have a pop up into this area to form a right shoulder and then roll over. Now, why did I just say that? And how did I even think that that could be possible? Well, because I looked at past price action showing these hard reverses, which show me resistance. So when price was here, if we were to have a bounce, I knew it would come into this area and start stalling, which it's doing right now. So let me go ahead and grab this horizontal line and just drop this right here. And remember how I said it's a zone, never an exact line. So the line is just to help you visually know when you're in that area of interest. Right now, we are in an area of interest for USD JPY, which I will be looking for possible short positions on this. Now let's continue and draw some more support and resistance levels. As you can see, this is a hard turnaround. I'm going ahead and plop one of my horizontal lines there. So I know if we get up into this area, this is most likely an area of selling. Let's go and grab another line right here. Look at this hard bounce, and look, we came down again. It's a bounce. So this is support. And the more you do this, the more your eyes will be trained to finding these levels. Right here, as you can see, this is a level down below. Look at all these bounces on it. It came down again, bounced, came into the zone again and bounced. It is very easy once you do it a bunch of times for your eyes to pick up all the different areas. Obviously, the more dramatic price swings and bounces, it's going to be very easy to indicate. The harder ones for people to identify is the ones that are in between. So if I also grab this here and put this level right there, as you can see, this is support here, bouncing all over it. And it can be confusing for some, but the more you do this practice and you start identifying levels, it'll help you understand where price could possibly be trending. And I'm scrolling to the left to just validate. Remember, look at this bounce here. I got that level based off of over here, and these over here is when I actually drew it. And I'm drawing all of these levels off current price action. Now, if I just scroll to the left, which is what I was doing, and you'll be able to notice that a lot of the price action was still valid all the way back several years from when I drew it to present date. The reason being is because, like I said, all support and resistance is just other people trying to identify where price is going to bounce. Of course, there is some fundamental factors where supply and demand is a thing, and when certain assets are very cheap or overpriced. In this instance, it's exchange rates. So sometimes when currencies go way too far out of whack in exchange rate, then of course there is going to be a large amount of supply or demand coming into the market, which will cause these knee-jerk reactions where people start to identify it as support and resistance. And that is how it happens. It's the accumulation of this happening over time that everyone starts to see support and resistance. Now, I advise you to go and practice and look for all the knee-jerk reactions in the market and just start putting horizontal lines on there and scrolling to the left to see if it held valid. This will help you identify key levels of interest of where you should put your take profits, put your stop losses, and or find positions, both buy or sell. If you found this interesting and informative, please leave me a like, comment, and or subscribe. And like always, my friends, peace.